Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 17th of May. All right, now what a difference a few days makes. A couple of key geopolitical shifts, and the dollar is just sort of drifting backwards now. Well, shares all over the place, basically, but European shares open higher on China COVID relief. There's talk of a relaxing of the COVID-19 curbs on Shanghai, and that'll spread across China. So expected growth to kick back in. Obviously, that's going to be good for shares. The other key one is oil prices inch lower as EU's Russian oil ban stalls, right? These are two sort of things hanging over the market and really conspiring to really drive equities lower. Obviously, the price of oil through the roof, or was through the roof, sort of stalled. Now it's sort of coming back a bit, actually. But the key aspects of what we're looking for is, where do we go to from here? So now the Fed interest rate cycle is far from over, right? So I don't think that the market is sort of turning a blind eye to it. I know there's talk about US growth and these sorts of things. At the moment, we are seeing, just focus on what you can see, right? US equity futures up. It's a risk-on profile. And can you check that with the currencies? Yes, Euro, Sterling, Aussie, Kiwi up. The dollar pair's down. And once again, the dollar yen is the odd one out. So with that, equities up. I tell you what, I keep referring to it all the time. Crypto's up as well. Pretty clear relationship there. And obviously with those equity markets rallying, right, you're seeing Asian equities and European equities starting to come back. Now, this is partly a relief rally, right? Driven by the geopolitical events. But as I said, the Fed story is far from over. But this is the way the market works. It gets fever pitched around major economic data releases and the Federal Reserve comments and these things. And then it has a breather, right? And as I said at the end of last week, we'll start to see the focus shift to the other central banks, right? That they are now due to come up. And we'll start to see what's happening with those. So, and keep an eye on the economic data, because the economic numbers now mean something. The central banks are telling us what they're going to do and when they're going to do it if they see certain data releases hit certain levels. So now we do have an active fundamental market. Of course, it's reacting to the geopolitical stuff. And we are starting to see, as I was just saying, a bit of a relief rally in a lot of these pairs, and it's good. This is refreshing. It cleans out the market. Euro's coming back towards 104. I tell you what, really, it could get back up to sort of 106 before anything else happens. Sterling, okay, well, it's a long way to 128, but there's nothing up here at the moment. It could easily squeeze, like a big short squeeze higher, and the Aussie back towards 71, and Kiwi a little bit higher there as well. I've seen dollar CAD break to the downside, going with that move. The oil did stall, but now it's sort of come back strong. And dollar yen is the sort of odd one out. I think everyone's sort of scratching their head there. What they do, they go with the dollar. It's almost like a carry trade. If the Fed keeps raising interest rates, the carry trade will be on. Dollar Swiss and the dollar index still sort of slowly moving topside, but and a bit of a way to these support levels. So once again, we could see a little dip on these things as well. So we've got most of the key data out, right? So if I come back to the global markets and just whip through that, the gold slowly making a comeback. Oil has actually, after the curve on the oil band has really pushed oil up. So then you've got these equity markets, right? Okay, just looking at the NASDAQ and the S&P, a little bit of a relief rally, but I tell you what, no one's really looking to go long here, right? We've got some resistance levels to work with there, and looks like the crypto is after a stop loss run under sort of 29,000. It's sort of stabilized, Bitcoin in particular. With that Chinese COVID relief action, commodities back on the charge, right? So we're starting to see some things moving, but don't forget, every week the structure is the same, right? You don't rush in and just start sort of clubbering trades Monday, Tuesday. It's the worst day of the market, Monday. Tuesday, really the markets are really reconnected. All centers have been open for 24 hours, and we're now starting to get some traction around what's going on. the key part to where it goes from here, generally, okay, we start to look at where the fundamental economic numbers are coming out, what's coming out, what's going to impact, and then you can join the dots with regards if they're going to impact the equity markets or the currencies or commodities or whatever it might be, right? So that's where we are just at the moment. So you need to just start paying attention to the cycle, the weekly cycle, not just the monthly cycle of numbers. And the easiest thing to do is just scroll down through the fundamentals here and see what's coming out, right? It's Tuesday. Wednesday, we got industrial production numbers, a bunch of other US numbers there as well. Retail sales actually today. All these numbers are components that the Fed will be mulling over to work out how far they move interest rates, etc. So then tomorrow we've got UK CPI, some final CPI numbers out of the Eurozone, some housing numbers, inflation numbers out of Canada will be very important, right, to their next leg of movement. Like we're seeing, inflation numbers globally are the key topic. So any inflation numbers, you're sort of scrolling through and sort of trying to work that out. The Kiwi employment numbers there, or actually sort of budget balance, there's no big deal there. But the Aussie employment numbers here, right, not much of a difference between the flags there, starting to become important, right? The RBA raised rates. There is an election in Australia coming up. It's sort of there or thereabouts, but they've done their work for the moment. And just scrolling through to the end of the week, you want to sort of piece it together. Okay, there's nothing sort of too hectic, right? Which is good, which means there's no sort of mad climatic hit like we see on the non-farm payrolls or even leading up to the Fed. So what you can simply do, if I just come back to the global markets page, is start to connect the dots. Right now at the moment, coming into Tuesday, European trading in Europe, we are seeing, okay, US equity futures giving us the core direction for the equity markets. And that's reflected in the European equities and Asian equities. Obviously, as I mentioned earlier, to do with the relief or potential relief from the COVID curbs in China. That's having a positive correlation there with the currencies. So keep an eye on that as you go forward. And that's all you can do. I mean, keep an eye, like to me, the US equity markets are the epicenter of the raw nerve at the moment, right? They are impacting the currencies, okay, mainly the US dollar, the cryptos, and not so much the other commodities because they are being driven, around those geopolitical events with regards China and the COVID relief, and also maybe Russia not getting banned by the EU. All right, so that's where we are. It's Tuesday, plenty to play for this week. The good thing is, and you might think this is, it's a bit disappointing because there's no major crazy numbers coming out. The good thing is when you get the single numbers coming out, single components of, say, the US economy, it's easy to work out what's going on and the markets move more orderly, right? I still think might be a bit of a way to go with regards the this sort of US dollar short squeeze. So just keep an eye on that. We're coming up to some levels here. You got to think for all money, right? If there's going to be a short squeeze, there's no massive data. We get a slight bit of weakness in those US retail sales. We could take out some stops here. Like Sterling's already taken out stops. There's got to be some euro stops around above 105. Is it worth having a crack at? Well, maybe. I was going to say not really, but it might be. And you might see if we get a decent little run, then you might see a little bit of a false break on a number of these trades. As I said, I don't think the overall trend is going to change, right? The dollar's strong and that's it. With directly related with the US interest rate cycle, what the Fed's up to. They got their hands full. So just having a look at these pairs, if you just wind them out a bit, you can start to sort of get a bit of depth around where these moves have come from. And it will start to sort of show you that they've come a long way and they might have a bit of relief before we see the dollar rally a bit further. If anything, keep an eye on the dollar Swiss and the dollar index. Okay, key indication of what's going on there. You can see exactly what's happening. And let's just play it out from there. All right, guys, have a good one. All the best. Cheerio.